Hey photographers, I have a question for you. Did you just start your business or are you about to make it official? If yes, first things first, congratulations. But now the more important question and the reason for this video, have those startup costs started adding up? When you're launching your business, you're investing in a lot of things up front, from buying camera gear to setting up a website and maybe even taking some business courses to help you get going. There can be a lot of expenses right off the bat. But here's the big question. Can you actually deduct those startup costs for your taxes? Hey, my name is Heather and I am a wedding and senior photographer based in PA. On this channel, I love educating other photographers about taxes and finances as a small business owner, and I'm so excited you're here. In this video, I'm going to break down what startup costs are, how to deduct them, and how to track them so you can save the most amount of money as you get your business up and running. This video is brought to you by my 45 Goals for Your First Year in Business guide. Starting out your photography business can be overwhelming, and your main focus is to shoot as much as possible. But if you're not marketing yourself correctly or you're not setting your business up on a firm foundation, it may fall into the statistic that 80% of businesses don't last past year 3. This guide will walk you through 45 tasks to accomplish in your business in the first year. From marketing to camera skills and networking to workflows, this guide will help you set your business up for success so you're ready when the inquiries start rolling in. You can grab the link to this free guide in the show notes. Now, let's jump into startup costs. First, let's clear up what startup costs really are. Essentially, they're the expenses you pay before your business is fully operational. Think of things like buying equipment, your cameras, lenses, and lighting gear, setting up a workspace, maybe your home office, getting legal fees if you're forming an LLC or getting permits, marketing expenses like creating your brand logo or setting up a website. Anything you're spending to get ready for your business, but before you've actually started earning revenue, could be considered a startup cost. Now, here's where it gets a little interesting and a big question you may have. Can you deduct startup costs? The answer is yes, but there are a few things to know about how to do it. The IRS allows you to deduct up to $5,000 of your startup costs in your first year, as long as your total startup expenses don't exceed $50,000. So if you're keeping things under that threshold, you're in a great spot to claim that deduction in your first year. But what if your expenses go over that $5,000 limit? Maybe a question that you're asking yourself right now. Well, you're still in luck because you can still claim those costs just in a different way. Any expenses beyond that initial $5,000 can be amortized over 15 years, which basically means you'll spread them out and deduct a portion each year. This is helpful if you're investing heavily in gear or a studio setup up front. Now, let's break it down with an example to kind of clear things up. Say you're starting your photography business and you spend $3,000 on a camera, $1,000 on a laptop, and $500 on business cards and your website. That totals $4,500 in startup costs, which is under that $5,000 limit. You'd be able to deduct all of that in your first year, which helps lower your taxable income and keep a bit more cash in your pocket. But let's say on the flip side, you went all in and spent $6,500 instead of just $4,500. You could deduct $5,000 in your first year, and the remaining $1,500 would be amortized over the next 15 years. So you'd keep benefiting from that investment each year, but a little at a time. So here's a tip Be sure you're organized about tracking your startup costs. Keep a record of every receipt, invoice, and payment. That way you know exactly what you spent and can easily tally up your deductible expenses. A system like QuickBooks or even a simple spreadsheet can make this way easier when tax season rolls around. In my shop, which you can find a link in the show notes, I have a tax prep spreadsheet that would be the perfect starting point. This is the spreadsheet I used to track all of my tax numbers before I was able to invest in a software like QuickBooks. Now, one other thing to note is that after you start taking clients and earning revenue, expenses become operating costs rather than startup costs. For instance, ongoing purchases of memory cards, office supplies, or even ongoing marketing fees would be regular business expenses, which are also deductible but fall under a different category. So in short, yes, you can deduct startup costs, which can really help you save in that first year. Just remember the $5,000 limit for immediate deductions and the option to amortize anything above that. As always, reach out to a tax professional if you need guidance tailored to your specific situation. If you found this video helpful, don't forget to hit the like button. And if you want more tips on managing your photography business finances, subscribe to the channel. I'll be back next week with more ways to help you save time and money as you grow your business. And let me know in the comments, what's the most confusing part of taxes for you? I'd love to cover it in a future video. Lastly, don't forget to grab my 45 goals to your first year in business guide so you can start your business on a solid foundation and focus on what you love doing, capturing memories for your clients. Thank you again so much for joining me this week, and I can't wait to see you in the next one. Bye, guys.